Felix here. The big tech earnings offer you an opportunity to understand which way the market's going so you can make the most money. I want you to understand what the data is, what's about to happen here. So let's get straight into it. Now, where Apple goes, the market goes is the old saying. And you can see on the chart here, that's pretty much the way it works. Now, especially in a moment like this, where the S&P has literally lost 10% of its value since July, the Apple earnings, the last of the big tech earnings, really matter. But before that, we need to understand what just happened. The market reaction is to Amazon and how this all fits together. And we'll run through some real opportunities here, including this one. On Sunday, I'm teaching my simplified trading protocol. One stock, 3 rules, no emotions, just a rule-based system we follow, 75% win ratio over the last 8 years. This is gold dust. This is what makes it possible for absolutely everybody to trade. And I'll give you my entire strategy, the whole framework of it for free on Sunday. All you got to do is grab one of the seats we have, felixfranz.org/webinar. It will be live, so you can ask me questions, and I look forward to seeing you there. Now, Amazon. Let's look at the beauty that is this beast. And you might be thinking, this isn't beautiful, Felix. The green bit at the top is really, really small. And I was told that the green bit is profit, and you're right. They're only making 7% profit margins, but that's not really what it's about, because Amazon is still a pretty fast-growing beast. 13% extra revenue. And what is growing the most? Well, physical stores growing 20%, but that's third-party services rather, physical stores is only 6%, and advertising. Advertising plus 26%, we'll talk about that in a moment. That, to me, really matters. And then AWS, cloud, plus 12%. That's also pretty impressive. So the highest margin parts of the businesses are growing, and that's why we saw a plus 5% increase in profit margins. So no wonder the stock's up, right? Well, there's a little bit more to it than that, but yes, basically. So this was it. Operating margin beat guidance. Revenue was higher than expected. Profit per share higher than expected. Revenue for AWS cloud higher than expected. And guidance 160 to 167 billion. I mean, does anybody still pause and go, they're going to make $160 billion revenue this year? I mean, that's kind of insane, isn't it? It's just insane. I mean, I don't really know how you get to these numbers, but look at this. This is largely what this is about. And I appreciate Apple isn't a cloud player, but they are working on their AI and their cloud expenditure. So this all ties together. While Amazon is improving its market share somewhat or holding on to it, Microsoft is steaming absolutely ahead. And Google is, well, sort of limping along a little bit in Alibaba. Well, it's just a sad story, isn't it? I'm sad about Alibaba. Good old Baba got kneecapped. Now, have a look at this. Advertising revenue. And you think of Google being an advertising business, right? Meta being an advertising business. Amazon, they sell stuff, don't they? And they have a cloud business. Well, look at this. Google, 44 billion revenue. Meta, 33 billion revenue. But Amazon, 12 billion revenue. They just came out of nowhere, right? They're bigger than YouTube now, 26% growth year on year. So Amazon could become Meta, Google, just on the advertising revenue plus all the other stuff they do, you know, the cloud and the selling books. They still sell books, they do actually. I have a book on Amazon. You should check it out. Links down below. Catching up. And that's, I think, really the exciting part here for Amazon is that their little orange bar is just getting bigger and bigger and bigger. That's why we liked the earnings for Amazon. Now, if you look at Meta, and you're like, Meta wasn't part of the title, Felix, I feel misled. Well, give me a second, because it's important you understand how this works all together. Net profit margin, 18% up. That's amazing, right? Revenue, 23% up. You'd think that'd be amazing. Advertising revenue up 24% in a year where everyone's screaming, recession, where's the recession? I know Papa Biden's hidden it, but it's got to be there somewhere. So why do we not like this? Well, look at this. Daily active people at 3.14 billion. Nobody uses Facebook. No, nobody uses Facebook apart from the 3.14 billion people. Revenue up 23%. That's a beat. Operating margin, it's amazing. Free cash flow margin, 40%. The sort of stuff that makes Warren Buffett weep in his sleep because it's that amazing. Earnings per share, the real profit stuff, massive beat. Guidance, massive beat. So what do we not like about Meta? I don't know. Zuckerberg's Meta thing or his headsets or something. The trouble is when great companies deliver great results and they go down anyway, I kind of feel like bear market, because that's what happens in a bear market. We ignore the good news and we just look for the one thing that upset us. It's like someone who sits in the most beautiful speech in the world and he goes, there's a fly around here somewhere. I could hear one. Like, what's wrong with you? Go enjoy yourself. What is it with these people who whinge about stuff? So Apple, let's go back to Apple, because this is what's happening next week, the earnings for next week. This is what's going to make or break this market. Apple at the moment trades at 157% valuation compared to the S&P. So it's way more expensive than the S&P, 157 times more expensive. Normally, it is 135% more expensive than the S&P. So there's this premium here. Let's call it a 20% premium that we need to justify. How do you justify that? You need some staggering earnings. But there's always a but, isn't there, in my videos? If we had a full-time video editor, which is looking for one, by the way, we could put a big picture of a butt up. That would be cheesy, wouldn't it? No, we're not going to do that. Don't worry. Don't worry, we're not going to do that. We're trading here below the purple 200-day moving average. Now, there is a mantra that they teach you in banking, which is the following. There we go. Nothing good happens below the 200-day moving average. It's true. People tell you it doesn't matter. It does. It's not good. And yeah, I get that. Apple is a zigzagger. Apple is a great stock to trade, by the way, because look, it does this. Pretty, sort of consistency goes up and down. It tends to mean revert. It's just one of those things. And Bernstein, the bankers, they put out a thing saying, trade it like Buffett. And essentially what they're saying is buy, and this is not a recommendation from me, but it is from Bernstein, buy at a 20x price earnings multiple. That's where you should buy Apple. And that you should sell it at a 30x PE. So at the moment we're at 27. So we're sort of in no man's land. But if it drops a lot, you buy it close to 20x, you sell it at 30x. Which is a reasonable thing to do if you look at that chart, because it just bounces up and down, right? Imagine if every time you could buy near the bottom and you sell somewhere near the top. That'd be pretty brilliant, right? Don't ever try to buy at the top. You're not going to be able to do it. But let's look at earnings. So what are we expecting? Well, normally, Apple earnings are, a beat, and a beat. Normally everything is good. And the stock goes up. But what happened? In August, we went down 5.5% after the earnings. And that's because revenue was just a slither lower than expected. And they also, you can't see that, can you? Now you can see it. Yeah, revenue, 3 billion down. They were selling less iPhones. And they'll probably sell less iPhones again because there's Huawei out there in China. They're selling a lot less iPhones. And to an extent, they haven't really innovated the iPhone. The new iPhone's kind of the same thing as the last iPhone. I know there'll be somebody who'll disagree with me on that because he slept in a tent outside an Apple store for 48 hours to get his hands on it. But get a life. The phones are largely the same. They happen, which makes it a little harder to sell them. So watch out for that. But what I'm really looking for is the following. I'm looking at service revenue because that went up a lot in the last earnings and it has a huge margin. And I'm looking at their AI. Yeah, how often do they use the word AI? No, their AI investments essentially and how they think they're going to monetize that. So we're expecting them to spend about $5 billion next year on AI sort of cloud computing capabilities. And that'd be kind of interesting to see where that goes. Now, what's the market expecting? We actually know what the market's expecting. And you can go to optionswatch.io, which is a website that we built, and mobile version coming next week. That's the announcement from my developer team. So what do you see in this chart here? Lots of pretty lines, but this blue zone here, this blue box here, that is our expected move. That's the expected range. So if you draw that across to the stock chart like that, you can see we're basically looking at plus, I thought it was $10. Let me just double check. Yeah, plus $10. Don't want to tell you the wrong thing now. Plus $10 or minus $10, which is a pretty significant move on $166 stock. What is that? 10 over 166, 6% move, 6% up or down. So we're expecting quite a lot of a move as a result of earnings. And you could trade it. You could set up a bullish trade on it that would make you 17%. It would have a 79% chance of making money. But it's still fairly risky. It's a bit of a coin toss situation, so I probably won't. But watch out for this and read it and analyze it, because the market is bonkers. And if you saw the Amazon results came out, let me show it to you here. They came out here. Stock went up like 4%, dropped 5%, went up again. So total like zigzag insanity as people are trying to digest the data. But Apple, honestly, is the one that's going to make or break this. So we've had two misses. Meta at Google. Microsoft and Amazon look good. So at the moment, we're at 50-50. The thing that decides the way this is going to go is Apple. And until Apple, I'd be a little bit cautious. If you're in the market, if you're buying, if you're trading, I'd be a little bit cautious. I'd just do a little bit less. I just don't think it's the right time to do it, because Apple is essentially the new Fed for the next week. So it's the one that's going to make or break this all. Irrespective of that, can we always trade? Can we always make money? I believe so. And we can do it by trading one stock. Beginners can do it. People with very little time can do it. Maybe 3-4 hours a week would be the minimum. And you could do that in your lunch break or in the morning, and you could set up most of it. You don't have to do like a lot of it during daytime. And it's just so nice to have another income stream. Honestly, it really changed my life. And I'd love it if it would change yours. Our mission is to bring 1 million people to financial freedom. Now, if you enjoyed this video, I'm going to link to a video at the end here where I teach you hedging, eliminating risk from your portfolio. And it's such an important lesson. I'd love for you to watch the next one. I thank you for watching.